The P&L is the income statement. I need more information before this one. Because as I said, from the operation perspective, or operation management perspective, this P&L statement will be a monthly report. In our simulation project, this is a quarterly report because the company is released their quarterly financial report to the public, report a P&L statement. Internally, actually, we can get it every month. This is, we call it part of the controlling system. Actually, there are reports before this statement. The report is, we call like the sales report, the sales revenue, whatever you call it. So simply speaking, this is you have different assortments or different products, right? And then this is the price, this is the quantity sold, right? So, and then you times together, this is your revenue. But thinking about the grocery store, your revenue is not by one product. That report should be before this one. And then if this is a monthly report, and then the sales report should be a daily. And then as the manager, then you have the sales report, and then you have this P&L. But the other, let's say that the report or other document we needed to review, all right, as the manager, sales, stock. I mean, this is more like a very basic. You will figure out later there are much more document or report you needed to review on the daily basis, on the weekly basis, on the monthly basis. Monthly basis, P&L, weekly or daily basis, the sales report, the stock report. Well, you need to bear with me. Sometimes I call this income statement. Sometimes I call this P&L. Sometimes I call this profit and loss. You know, they are the same stuff, all right, the same document. This is the most important financial statement, the result of our operation. In our simulation project, you know, actually, I would start to focus on the sales report later on, this report. It can be like a previous year's sales report. It can be the forecast sales. And then you will see the financial report also included estimated. All right. So actually we call this a pro forma financial documents or financial statement. And then there will be the actual or realized financial statement. One is before, one is after. Actually, the statement, the document itself is very straightforward. But once you feel you are ready to be a manager, you needed to familiarize or you needed to read all those documents. Managers, one of the very important, responsibility is to understand or to memorize all those numbers. You have the system, all right? You have, this is your system. And then you will know what decision to make, what plan to make, what control or what actions to make. Revenue from sales. I don't read the number for you, all right? I just show you. This is the revenue, right? The sales. And then you know this number come from where? Come from your sales report. The second, let's say that the second batch, right? It is the cost of goods sold. I call this operation, I directly call this cost of operation. The cost is more like a direct cost, all right? So this including this, actually, this is a very simple business, right? They sell the products, but the products, those are like the input, right? Or we call it the inventory, right? We receive those from the supplier directly, right? This is the beginning stock. This is the stock ordered, right? So those two together, this is the cost of goods available for sales. This is the available stock. And then there will be the leftover. We call this end stock, right? The beginning stock, let's say that the stock receiving, the stock received minus the stock left, right? Or the end stock. So this is the minus 127. This calculation, this is the total cost of goods sold. This number is also from another report. What report? Guys, what report? Stock, right? Stock report or stock management report, whatever you call it. Like the January 1st, you have the beginning stock, right? And then over the last period, let's say that the 1 year, right? Or 1 month, whatever, this usually is a month's report, okay? And then over this 1 month, you received how many inventory or how many stocks. And then after you sold, after you selling this, and then how much you left. Oh, so that means like our revenue minus the cost or the direct cost. This is our gross margin. What we need to minus is the operation expense. I mean, because your company doing this business, right? So all other expense, HR related, right? Or let's say that we call it the facility, utility, right? All those expenses will be allocated to this report. This is your revenue. And then this is your direct cost. And then you have the big chunk of expense. We put all the expense here, the salaries, benefits, whatever. You will have like the office, suppliers, printing, right, computer, whatever. Actually, it's a long list. And then you will have other marketing expense, right? Advertisement, and then sometimes that they put the list, they can categorize this into, big categories or, specific category. It depends. Don't forget that there will be the, some of, we call this depreciation, right? What means depreciation? You have the fixed assets. The fixed assets won't be there forever. They will be depreciated in 5 years, 10 years, or 15 years. So every year, they will take that percentage as your expense. And then after, for example, 5 years, this fixed assets, for example, a truck, right? This truck will become zero value. In our simulation project, it's quite easy, right? We have storage costs, okay? We have the labor costs. We have the truck costs, all right? We have the marketing costs. So they only listed several, but allow me to say, actually, the reality can be, again, the reality can be more complicated, right? You know that you start your business, actually there are expenses you cannot avoid. Also, in the medium run or in the long run, you can somehow increase efficiency, trying to reduce the cost. But at the beginning, very beginning, I would rather to focus on this, but not this. Don't get me wrong. I don't say like you can waste a lot of money, right? Don't waste. Any managers, they lost their, let's say, focus or priority. They start with this cost saving. Silly example, very hot, right? In order to reduce the cost, I turn off the AC. Your grocery store, no AC. What happened, right? Thinking about the motivation and the customer satisfaction, and then this is not the things you should start to focus on. Income before tax, all right? You do the calculation. We have this gross margin, right? This is the gross margin, and then you minus the expense. And then you get to this, we call this income before tax. But sometimes we call this, let me write it. Actually, we call this EBIT, earning before income tax. The next step is trying to set aside this income tax because we haven't paid the tax yet, right? So this is the allowance. Final result is the net income, or let's say earning after income tax. This net income will go to the retained earning, and then you will have the realized or actualized P&L. So those are like the two. One is by your estimation. You have the pro forma P&L, you have the realized or actual P&L statement, all right, before we make any operation decisions. Now, we needed to do what? We needed to review the previous year's report. Here, you will see year 1, year 2, keep an eye on this, the percent difference. This is important. So usually we will check, oh, this is your gross margin rate, right? This is your total expense rate, okay? And then, actually, you have this, your EBIT, 2 year. Once we have 2 year put together, let me just quickly show you what happened, right? Actually, the sales actually going up 17.2%. Pretty good, right? Annual sales increased. And then you will see the gross margin actually is growing at the 50%, even better, right? That means our sales go up. We have the 15%, this is the total operating expense, become 19.5%, right? You have to spend money, for example, advertisement, right? Marketing. And then you spend more, sell more. Whether this is effective, whether the advertisement or those marketing campaigns are effective, but it seems good, right? Why it is good? Because you see, hey, oh, I see, because our sales go up, right? And then also our expense go up also. But the good thing is our net income is grow 41%. Those two documents are very important. All right, very important. You need to focus on.